Today I want to talk to you about refinancing your mortgage. The last 12 months have been a challenge. Income may have been disrupted. The deferral options that your mortgage lender was offering earlier last year may have ended. So all of this is adding pressure on households to figure out how to survive the coming months, especially in the face of the latest lockdown announced by the government of Ontario. If you have been fortunate enough to maintain income over the last couple of months and at least manage your debt load so your credit score hasn't been affected, the best option for you is to consider a refinance. There are lots of reasons why you might want to refinance your mortgage, including the ability to reset your amortization over a longer time period. You can reset to 30 years, which gives you a low monthly payment. You can consolidate any accumulated debts into your new mortgage. And of course, with interest rates being at historical lows, there's a major incentive to pursue those lower rates and consolidate everything together. On the flip side of this, you would likely have to break your existing mortgage, which involves an interest penalty and is some added expense. Now, if the last 12 months have really kicked you to the gutter and you've had challenges with your income and your credit has taken a hit, there's still the option of a home equity loan. The one thing that is going for you most likely if you have a home in the GTA is that your house has increased in value. So you've created equity. And with that increase of equity comes an opportunity to take what's called a home equity loan or a second mortgage. Home equity loans are really useful to tap into that equity for many different purposes. It's very flexible. The decision to lend is not based on your income or credit necessarily, but on your equity position. And that money can be used to pay arrears on your existing first mortgage, consolidate debt, fix credit issues, and in fact, if there is enough equity in the home, you can borrow enough to prepay interest for a year, which at least gives you a lifeline to survive the next 12 months until after this pandemic has finished. However, one word of caution about home equity loans and second mortgages is that they're expensive. And so they're not meant to be a long-term solution. You should be really looking at it as a bridge solution to get you from point A to point B, weathering the storm, so to speak. And there should be a very clear exit strategy when you take on a home equity loan.